Welcome to Smokin Bulls, the podcast about business, money, and lifestyle. Today, we're joined by National Bank Private Banking 1859. We're going to learn a little bit about the private banking sector and who qualifies for it, the type of products that they offer, and if it's a right fit for you. So let's get into it. Okay, as mentioned, we're here with National Bank Private Banking 1859, and we're here with Jubril Adesina. I hope I pronounced that right, Jubril?
Yeah,
Pretty close.
Yeah.
We're going to let Jubril take the floor soon, but I'll do a brief introduction of Jubril just to let your viewers know who he is. He's a senior private banker with National Bank Private Banking 1859. He offers tailor-made solutions to clients with sophisticated planning, banking, and credit needs. Jubril works with a select group of clients, providing the exclusive red carpet service for his distinguished clients. Jubril holds a Bachelor of Science degree in chemistry, as well as a certified financial planning designation and a personal financial planning designation. So, Jubril, I'll turn it over to you, and you can tell us a bit about chemistry if you want to, but we'll probably stick to private banking for now. So,
absolutely.
Tell us a little bit about it and who maybe qualifies for it.
First of all, thank you for the introduction.
You bet.
Tyler, and Dave, thank you for having me. It's a real privilege to be on the podcast here. And with private banking, 1859, it's a division of National Bank. It was founded in 2009, and now the number one private bank in Quebec. And with the success we've had in Quebec, the bank would have thought to expand out in the West. So starting from major offices in Toronto, Calgary, Vancouver. And with me being here in Edmonton, I joined National Bank in the last year, and I'm actually the only senior private banker here in Edmonton. It's been great, and the service offering that we offer and the exclusivity, the red carpet service, has been something our clients, my clients, have been very appreciative of, because it's very different from what they're used to at the other financial institution. And who qualifies? That's a very good question. I typically cater to a household net worth of $4 million and over, and or $2 million in investable assets, or household income of over $500,000, so $500,000.
Okay, so all of those things are just any combination?
Any combination. So would it be or? And there's no hard and fast rule, actually, because we would deal with clients on a case-by-case basis. An example would be a doctor that's just starting out their practice fresh out of school, for instance. They may not have those assets yet. However, we know with the right guidance and support and advice, they'll get there in no time too. So we want to be financial partners too, and partner with this side of clients too. So again, I would evaluate each client on a case-by-case basis, but we have that as a guideline to start with, because we want to make sure our clients are getting value out of our services.
Okay, so I think a lot of people are not familiar with private banking. That's a big one. And if they are, or if they think about it, they just think that it's going to cost them a lot of money. And I would assume a lot of people feel they pay too much banking fees already, unless they're sitting on a nice $50,000 in their checking account and leave it there for the bank to use. But I guess, what would you say for that side of things? Why private banking over regular banking?
Great question. I think that's one of the misconceptions, the high cost and fees of private banking. Mm-hmm. And I will tie you back to the clients that qualify. But to address that, the reality is private banking, so to speak, can actually save the clients that do meet those criteria money and a lot of time. And for the clients that we work with, an example would be the C-suite executives, so the CFO, COO, and CEO of top corporations that are very busy. I would not have time to particularly go into a banking branch and the rest. The value of being, able to text their banker or my associate, for instance, or just shooting an email or directly communicating with their CFO and knowing that we have the authority to act on their behalf is tons of value, and you can't put a price tag on that. And also the cost in itself too, it's very competitive. And if you were to compare our service offering to what the retail offers. So retail, for instance, if you were to have multiple checking accounts, that cost really stacks up very quickly. But a private banking, for just the private banking fee, what we charge in this case is $100. It would cover unlimited accounts for banking and also their holding companies, PCs.
Yeah.
Now, if you were to compare that to retail, I think that stacks up really nicely. In addition to the flexibility that you get and the customized pricing options that we offer that you will not get at retail. So, and also we offer, our clients flexibility to charge the private banking fees through their PC or holding companies where this could potentially be a tax write-off. So all in all, what I find is for those clients that do qualify, they end up saving money as opposed to actually costing them too. So I think it's a huge misconception, and we would analyze each client, what they value, what they need. And then if there is a value there, the cost is usually next to nothing for them.
Okay. What would you say, especially, call it National Bank being your parent company, with the lack of, say, branches in Western Canada, how do you handle that?
Yeah, I tell you what, that question comes up every time, and that's a very good one. I think that with the core, our client base, we find that banking is actually really changing. And even the top 5, National Bank is, part of the top 6. We find that clients are gravitating towards more self-serve solutions where they don't necessarily need a brick and mortar to kind of visit, to do most of the transactions. Most are done online. Now, I did mention earlier that my associate and myself, we're very accessible, where there are things that, again, you can't do online, but I'm only one text message away. So most of my clients that do need to actually get some things done, they shoot me a text message. Sometimes we would courier maybe a bank draft to where they need to be, or a bank card to Kelowna for those areas where they don't, we don't have a brick and mortar. In Edmonton, we have the one branch, for instance. And many of my clients, I can't remember the last time any of my clients visited the branch, because we could actually service them without having to be in a brick and mortar.
I can't remember the last time I went into a branch.
Yeah, I hate going into branches if I have to go into a branch.
That's right.
And you mentioned earlier that most of your clients who qualify for this type of service or need this type of service aren't taking the time to go to a branch anyway. They don't have the time, or they don't want to take the time. Sounds like me.
No kidding. Well, that's a big deal then. So,
so you've mentioned briefly some of the solutions that private banking offers, one of them being that all of your accounts can be bundled into this one price, whether they be your holdco, your operating company, your personal accounts. What are some of the other services that you find in private banking?
Yeah, I must mention that it's not the operating company.
Oh, okay.
Mostly the holding company,
the holding company,
the PC, and the personal banking.
Okay.
The other services would be US dollar financing. We, offer clients that would have, say, businesses, over in the US, or snowbirds, or looking to buy properties in the US as well too, and they really want to have access to US dollars for preferred exchange rates and all of that. We could actually set up a line of credit in US dollars and based on the US prime, or find other solutions that would save them money. The other piece too is, we have the ability to lever a variety of assets. So an example would be life insurance policies, which are called the cash surrender value lending, and also investment line of credit through, holding investment portfolio as collateral, which we can kind of, expand there a little bit later. So those are some of the things we offer. We have the ability to borrow, to holding companies and family trust as well.
So when you say US, is that Canadian-based investments, or is this US-based lending? Meaning, let's say if I'm buying a house in Phoenix,
right,
and I need $400,000, are you looking to do, say, a line of credit on my house here in Canada, or are you lending me $400,000 based on my property in Phoenix?
So it wouldn't be based on your property in Phoenix. That would be more of cross-border financing, which is a different topic entirely. But if we're solely basing this in Canada, we're looking at your assets here. So if we, for instance, want to offer an investment secure line of credit against one of your portfolios to give you the $400,000, we would weigh the balance between giving you that in US dollars and what is the cost of that versus just exchanging at the prevailing spot rate.
Okay.
So you would have those options. It just depends on what makes most sense for you. If it makes more sense to actually do financing in the US, then we can consider other options to just get a straight out mortgage in the US. But sometimes you don't want to go through the whole mortgage and all of that to where you just want to pay cash. Then we can look at your assets here. And if you're liquid enough, which is one of the most important things that we look at in private banking, liquidity, we could even consider some unsecured financing in US dollars for that amount. And then we can, just get you that financing ready to go, and, you're one bank draft away from buying that property.
Okay. Good. I think some of the other services that are tied to the private banking, if I recall, there's credit card.
That's right.
I know at least for our Wellington clients who are qualified, they get a unsecured line of credit at Prime is one of the options as well. Typically, you include, I think, the credit card fee in the banking fees. Is that correct?
So, yes. So we do have a tier of service. We have the premium banking service, which I think is what you're describing.
For the Wellington.
For the Wellington. And then we have the private banking services for the Wellington as well, too. Right. So for those clients that meet those criteria. Just recently, we kind of realigned our pricing structure. Okay. So we have the credit card, so the private banking 1859 MasterCard, where that does have a fee, a separate fee, separate and apart from the private banking fee. Okay. For both packages, I think with the credit card, from going back to your question here, the credit card does give you a whole lot of kind of flexibility. So the lounge passes that you get, the 2.5%, foreign fee conversion that is waived, so you don't pay that foreign conversion fees, and also you have those insurance benefits too that kind of comes with it, in addition to the points that you get, which is a bit above and beyond what you would get from the regular National Bank card or their kind of retail cards. Does that answer your question?
Yeah, there's obviously two levels of cards here. Obviously, for the Wellington Premium Banking Package, they get a card, but it's not the same card as the private banking.
No, it's not the same.
Right. And so you're saying in the private banking,
that's right,
there is a bit of a fee to that MasterCard, the 1859 MasterCard.
That's right.
Okay.
That's right.
Okay. So give us some sense. Obviously, you talk about wealth management strategies. We work in the wealth management side. What type of situation or scenario, would a client be looking for to try and solve? What are some of the issues you're solving? You mentioned kind of buying a house cross-border, this, that. But, if you're talking about clients who are high net worth, typically they'll have good assets, but they'll also still have some debt. Right. So where are you making or taking them when it comes to, say, managing debt? What is something that you do as a private banker that isn't something they can get when they walk in the branch?
So my background as a financial planner has actually helped, and being a CFP as well too, where when we talk about debt, it's about tax efficiency. What are the tax deductible debt that you have, what are non-tax deductible debt, because we want to make sure that we're managing that because of the effective tax rate that is applied. So prime right now is 7.2%. But just going back to client and kind of putting things into context to say, if this was tax deductible and you're at a marginal tax rate of 48%, the 7.2% could easily be about 3%. Now that changes the dynamics of things too when you start to think about that. And another major thing I'd like to talk about with wealthy individuals, you're looking at cash flow planning. Expenses is usually after tax dollars. And there's an opportunity cost attached to that. So if a client were to call you, one of your clients were to call you and needed $2 million or $1 million, either for lifestyle needs or investment purposes. Now, the initial reaction is to pull the trigger, redeem. However, when we step back, because we're in the business of advice, we step back and think about the partners that you have in the private banking world to say, hey, what about you talk to Jubril first? And let's see if there's a solution here. Because most times as wealthy individuals, it's just interim financing. It's pretty much bridge financing. I need the money now. I'm going to have it back in 7 or 8 months or a year from now. Why do I need to kind of liquidate my holdings, my position in this particular, investments and then miss out on everything. So think about how the market has done between October year to date last year, and someone kind of just withdrawing their money and missing out on all of that too. So what we would do in this case is look at the investments. So the investment secure line of credit is where we come in and say, okay, you have this portfolio, this is what you need. If we send it to our, credit risk operations just to do a lending value analysis, we come back and say, hey, with your $7-8 million portfolio, we can get you a $4 million line of credit in this. Now, it's a line of credit. It's ready to go whenever you need it. And as we know, wealthy individuals also try to dabble in different interesting business ventures too. So knowing and having that flexibility, knowing that they do have that line of credit ready to go and being able to move, they could get in a meeting with Dave and Tyler today, say, hey, you know what, let's get this done and we need $2 million. Then they can just go back to the line of credit and just pull that out right away. So we position them there for that. And also, again, the tax consequences of redeeming $1 million is something we need to consider. It's a progressive tax system. The bracket gets indexed every year. If you can give them a break this year. So we take $1 million in form of a line of credit, and every year you can redeem it gradually to pay this back. And then in turn, we can do the math. It ultimately saves them money, which is going back to the value add for these clients where you're saving them money. I mean, the private banking fee is negligible compared to the tax savings and the creativity that comes with it. So that would be one of those things too, because expenses is after tax dollars and then a tax application of redeeming from your portfolio. So you want a partner that could potentially look at your assets and possibly provide solutions in form of, bridge financing, so to speak.
Okay. Do you do kind of the same, like a universal lending, meaning you look at all assets and would provide some lending that's not specifically tied to, each individual investment having to break and put a lien on every investment? You look at it as a pool of total value?
That's right. So it all depends. I think that what makes it easier these days is to, when your client structured between different non-registered accounts it depends on what's needed and how much is in each pool. We can look at a pool and set up one line of credit against all the pool, or we can look at individual pools and then set up a line of credit against that. The difference is just administration. If clients do need withdrawals, there's a little bit of process to that too. So if we have just the one bucket and clients can make withdrawals, say for instance, client only need $900,000, for instance, we don't need to take the entire portfolio and secure it. We just look at one portfolio that's got enough to do that. We do that. And then it can have this set up for a very long time and do subsequent redemptions from the other pools. Now, looking at a personal net worth statement too. So this is some part of my procedure when I talk to my clients is, hey, let me see everything that you have. And then looking at that, clients tend to have secondary properties, ski chalet, 2, 3, 4 rental properties, either in the holding company or personal name. We can look at some of those things and try to stretch it out back to 80% loan to value. One of the things that we do at National Bank Private Banking is ability to actually give more loan to value in form of, say, push it out 80% for some of those expensive properties. So, $3, $4, $5 million, again, case by case basis. But then we can actually really go as far as giving a lot more in form of, borrowing against those properties. And I find that those are the easier way because, you live in the house, you have built a lot of equity, or you don't live it in as much because you only vacation in there. Pulling out equity in some of those properties and giving you as much as we possibly can opens up room if you don't want to finance again investments. So we would do mortgages and lines of credits too as part of it. I guess where it starts is just basically financial discovery, deeper discovery, looking at overall net worth, and then position the client, giving my clients 3 to 4 different options as to what makes most sense for the problem in front of us.
Okay. So, I mean, obviously, the more money you have that's not in an RSP, a pension, a LIRA, vehicles, these are harder assets to lend against. So you're always looking for non-registered portfolios, tax-free savings accounts, other properties, companies, things of that nature.
Right. Yeah, absolutely. I think you nailed it there. And what we call it would be tangible net worth. Things that can easily be liquidated. So for clients that have built RSPs, TFSAs, you can only build so much in those as well too.
Mm-hmm.
But we would consider that, and perhaps offer an unsecured line, for instance. So if they don't have non-registered and they built this, and we recognize the amount of work or this equity stake in their operating company and all of that too, we would come up with again more of a reasonable solution. Say, okay, well, we can't do this. However, have you considered this option as well too? So I would give you an example. I work with a client that's very light on liquidity, a younger client. I've got about 20 properties in a personal name and 25 in a holding company, and they were looking to buy another property in BC. And he just believed in the asset class, real estate. He wouldn't invest. He wouldn't do much. Well, we did advise that liquidity is very important, but however, and he only paid himself very minimal, under $100,000. But we were able to find a solution to buy a property of close to $2 million in BC by just using the free cash flow in his holding company to qualify him for that. He was really impressed, sends a lot of referrals, because our approach goes beyond notice of assessment and T1 generals. Mm-hmm. We look at the full picture. We're looking at your operating company. We're looking at your holding company. What is the bigger picture to actually get you there? So in the case of this client, the net worth is built mostly in real estate, but then we're still able to find a solution for them.
Nice.
I know one of the issues that I've had in discussing this with clients, because we're talking about a client who's got a lot of banking needs. And so they're typically going to be tied into a bank somewhere. So they're going to have a ton of transactions happening, credit cards, you name it. Is there any assistance from your guys' side if they say, yeah, we want to move to private banking? I know a lot of people are scared to make that move and leave the bank that they're currently at, because it's just, there's so much that's happening. They're going to miss payments here or there. And that transition is probably difficult. How do you address that move from one institution to another?
It is very difficult. I acknowledge the banking relationships are very sticky. Mm-hmm. And our approach to that is, first of all, when we start, there is no rush to actually close any of your accounts. In fact, we encourage you to keep it open. The first 3 months, I personally do not charge private banking fees. Okay. So I keep that open so that, again, my clients get settled. We have a template that kind of just prepares them for the task ahead, more of switching things gradually. Sometimes it might take a year or two. We're not in a rush to say, close everything down, move over to us. And in fact, the banking side is kind of the easiest part of what we do. So most times our clients will come to us first for financing solutions before the banking stuff. So we probably would open one bank account for them to just have access to what they've done. And because of the service, they slowly would transition over the banking. So the credit cards are somewhat kind of easy too, because once it's set up, they have time month to month to kind of just move those expenses over, either because the points they will get encourage them, or the kind of the concierge services and some of those lifestyle benefits that comes with the credit card. An example actually would be one of my clients is going to the French Open, and he texted me last night and said, "Whoa, I love the credit card because we're in a lounge here in Calgary, just having a good time, and we were able to get our French Open tickets thanks to the concierge services, because they just called and these guys just planned everything out for them." So again, you can't put a value. For them, that's value right there, and they don't have all their banking with me yet. But they've already seen the difference between what they had versus what they have now. And slowly their PC is already here. And it's probably going to take another 6 or 7 months for them to move everything completely over. So for these clients, there's no rush. Take your time. Once you kind of start seeing the value and you can compare yourself, then you will start to move things over too. So in fact, we don't encourage people to pull the plug right away. We just want you to take your time. And when you see the value and all of the benefits that comes with it, you will kind of do that in your own time at your own pace.
So for a client like that, so how do you set up in private banking when someone has an operating company? Do you set that up through private banking, or you set that up through a normal banking?
An operating company would be through our commercial partners. So again, we love to have wrap our hands around clients so if we can have the operating business, we wouldn't say no to that. But that would be set up with a commercial. The holding company, because of the complexity that comes with, the management of that. Now, it depends on, some clients may think it's an operating company when it's actually just a holding company.
Right.
So it depends. But if it's a large commercial, again, we don't have the capability to service that. It would just be more of a commercial.
Even some operating companies are pretty much like holding companies. There's hardly any money in, one deposit in, and really nothing out.
That's right.
They're pretty much holding companies.
Sure, exactly.
Even though they're not operating like that. But
that's right.
Okay.
You mentioned briefly about some work that Dave and I have done in the past, levered lending on insurance policies. Maybe you can describe that process a little bit. It's not something that we've found. Not a lot of people are really familiar with that. So maybe you can describe it a bit, the strategy that's behind it.
Absolutely. I find that that is one other very flexible, and it's getting very popular too. It's a product suite that getting most inquiries about on a daily basis. So this typically whole life permanent life insurances will have a cash surrender value attached to it. Now, there's a two-part to it. So we do call one the front end and then the back end financing. So when clients pay their annual premiums, typically at private banking, we would look at a minimum annual premium of about $300,000. Again, case-by-case basis. When they pay those premium, we are able to do something we call immediate financing arrangements. IFA is what it's popularly called in the industry, where this premium we could potentially refund 100% back to the client. Now, for a business owner who is concerned about estate planning and risk management, and business owners usually need cash, and they'll do it for cash injection, but putting away $500,000 or $1 million in premiums every year for maybe 20 plus years or maybe even lifetime, that's a big financial commitment. Now, these business owners are looking for partners where, okay, if I do put this in, I do need this money. What are the options available to me? And that's where the front end, the immediate financing arrangement comes in, where when they pay the premiums and we've confirmed, we can, again, subject to debt servicing, we can refund this premium back in form of a line of credit. Now, every year as they make the premium payments, we will release the tranche for the premium every year. So you find clients ending up with $6, $7, $8, $9, $10 million line of credit limit. Now, they may not use it. They may use it, but having that flexibility, going back to flexibility of having the line of credit available to them as a business owner is huge. And it doesn't cost you if you don't use it. All the rules that apply to a line of credit would apply to it. So if you don't use it, you don't pay. And when you use it, you pay interest on what you use. So this is the front end. The back end is for clients that have existing life insurance that have built up the cash surrender value already. So we could lend against that too. Again, the policy does say 95%, but on a case-by-case basis, we will look at 100% financing on those, again, subject to debt servicing and overall financial picture. So that's typically what it is. Now, it's a line of credit that you could now go ahead and use either for investments, buy that property in Phoenix, or pretty much just having that flexibility ready to go to do whatever you need to do or investing back in the market.
So, I mean, as we already know, I mean, insurance, especially whole life, is a kind of a prized asset. It's looked at almost in a better regard than a piece of property.
That's right.
From its security and its,
That's right.
So when you have clients that are looking at some estate structuring, I mean, that's kind of, the big thing is they see it as losing a bunch of capital into a policy, but yet the fact that they can borrow almost up to 100% against the value of that policy brings them right back to cash flow neutral.
Absolutely.
But then they still have their estate planning strategy in place, and they still have access to their capital.
Absolutely.
And if structured properly, once again, potential for tax deductibility and all sorts of things are available there.
The key word, if structured properly, there could be a whole lot of benefits to it. And also, I may add, with the recent announcement with the capital gains inclusion rate, that incremental tax brings us back to estate planning, brings us back to the importance of life insurance as part of estate planning, where if clients are now looking at a sizable estate in the end, and if this were to pass and become a thing, you're looking at clients looking to buy sizable life insurance policies to mitigate the tax erosion of their estate eventually, giving up that much capital now, there's an opportunity cost, but being a financial partner to be able to, say, hey, you know what, you could do that. And we are able to partner with you to give you, some form of a lending against this policy would be kind of huge and peace of mind for clients.
Mm-hmm. Well, yeah, that's the problem with an estate. You might be able to bleed some of your capital gains off as you own them and have them and keep yourself under some of these new rules, but you can't do it for an estate. Right. Once it happens, it happens. And so people's estate need is going to be, at least 17% higher. Potentially from some of these rules. Mm-hmm. So, yeah.
That's great. So what I'm hearing here is that it costs $100 a month to get your personal number. Right? Is that what I'm hearing?
Well, put it simply, yes. And of course the all of the net worth and all of
yeah, of course.
Yeah, one of the three. Plus $100.
Plus $100.
Yes. Plus $100 a month.
So the one question I would have, and I haven't sorted it out here yet, there's a premium banking and there's private banking.
That's right.
What are the differences between those two service levels, I guess?
That's right. So we at the private banking, we deal with pretty much everything I've talked about the last bit, where the complex structures and all. Now, the premium banking side, they are more of the clients that do not have the complex need.
Okay.
Do not want to pay the $100, and we can simply just assist them in other ways too. So because we have, for some of those professionals that I described, they may not need the complexity and all of everything that I offer. Premium banking would be the place for them to go or start out. Mm-hmm. And as needed, I do have a very strong partner in the premium banking side where she would triage those opportunities too. So when they do land on that desk and it's not something that she could do, then she would bring in a private banker. So I think it's just more of all those clients that don't meet that criteria, they would most likely
they fall into premium banking. Okay.
I mean, we have quite a few clients, Tyler, that are premium banking. They don't have a massive,
they don't have a need for
borrowing need. They're not, they're not moving massive amounts of money around and don't see the need for a specialized credit card or any of these types of things. So they're covered under the Wellington plan.
That's right.
I guess the Wellington premium banking plan, which is effectively, I can't remember, it's $250,000 in assets with us.
At premium banking level?
That's kind of a no-cost banking with a no-cost credit card and potential for a line of credit at Prime. But that's based on the lending side is based totally on their assets and liabilities and all those type of things. So
absolutely. Okay. I did meet a client too that was introduced to me, and we had a chat, and for him, his needs are so simple. He does qualify for private banking, but for me, there was no need to put him there because his needs can be met on the premium banking level. So I made the introduction to my premium banking partner, and she took care of him. He's happy. He doesn't have to pay fees. The credit cards are free and all of that. And, he's happy. And so just about home of best fit.
There you go. He could pay $100 to have Jubril's phone number and you decide not to.
Yeah. Turned you down. Right on.
Awesome.
And the MBIN partnership too, which Wellington alters. So MBIN is the National Bank Independent Network. So we have partnered with private wealth firms and investment firms like yourself too, where we want to provide the banking and the lending services. And somewhat, again, we do have that agreement where, it's to non-compete, kind of no poaching kind of area there.
No poaching.
So we want to be that value add, that extension, and just make sure that we have that, again, open architecture concept with your clients to where, they have National Bank, they have you, and we kind of complement each other that way.
Yeah, we've got quite a few clients on it, and they're quite happy with the setup. So
yeah. Well, that was great. I mean, that gives me a much better idea as to, what the services are that you guys offer. Any other stuff on your side, Dave, that you want to touch on? Or
no, I got 1, 2, 3, 4, and I've checked them all off.
I didn't put check marks next to mine.
I've asked a lot of you on my list, though. So yeah.
Cool. Well, I think that's a great summary, Jubril. If anybody needs to reach you, you can certainly find us at smokinbulls.com. We want to thank you again for sharing your time with us today. It's been informative and enlightening. So if you want to follow us on our socials or catch us out at smokinbulls.com, thanks again for watching. Don't forget to click to subscribe and like our videos. Thanks again. Bye for now.
Awesome.